I'm sure you've heard the news. The financial world is buzzing, and everywhere you look, whether it's on your favorite finance YouTube channel, Twitter, or even in the group chat with your friends, people are talking about the latest hot stocks and cryptos. It's almost impossible to escape the hype, the speculation, and the endless debates about what's going to be the next big thing. But with so much noise, how do you actually figure out what's worth your attention and, more importantly, your hard-earned money? Today, we're diving deep into 4 names that have been making waves: IBO, INDP, CDTX, and the mysterious LCX crypto token. Whether you're a seasoned investor or just starting out, you've probably seen these tickers pop up on your feed. But what's the real story behind the headlines? Let's break it all down, cut through the hype, and see if any of these are actually worth a spot in your portfolio. Everyone's talking about IBO, INDP, CDTX, and that mysterious LCX crypto. These names have been trending for a reason. Each represents a different corner of the investing universe, from cutting-edge biotech to the wild world of digital assets. But before you get swept up in the excitement, it's crucial to understand what you're actually buying into. Are these companies and tokens the next big winners, or are they just the latest fads destined to fade away? Let's take a closer look at each one, starting with IBO. But are they worth your cash, or just more hype? That's the million-dollar question. In a market where everyone's chasing the next moonshot, it's easy to get caught up in the excitement. But smart investing isn't about following the crowd. It's about doing your homework, understanding the risks, and making decisions that fit your goals and risk tolerance. So, let's dig in and see what's really going on with these 4 names. First up, IBO, Impact Biomedical. Super cool name, right? But what's behind the name? Impact Biomedical is a small-cap biotech company that's trying to make a big impact in the world of health innovation. Their mission is ambitious: to develop breakthrough solutions for some of the world's most pressing health challenges. From new therapies to advanced diagnostics, they're aiming to push the boundaries of what's possible in medicine. But as with any small biotech, the road is long and filled with obstacles. But dig deeper, and you'll see it's a biotech company working on health innovation. Their research spans a range of areas, including infectious diseases, cancer, and even neurological disorders. They're not just talking about innovation, they're in the trenches, running experiments, and trying to turn scientific discoveries into real-world treatments. But here's the thing, biotech is a notoriously tough business. For every success story, there are dozens of companies that never make it past the research stage. Impact Biomedical is still in the early innings, and while their science is promising, they haven't yet brought a product to market. The thing is, it's tiny, kinda risky, and not yet profitable. Like many small-cap biotechs, IBO is burning through cash as it funds its research and development. They rely heavily on investor funding to keep the lights on, and until they can commercialize a product, profitability is a distant dream. This means the stock price can swing wildly on news, good or bad. One positive clinical trial result could send shares soaring, but a setback could lead to a sharp drop. If you're considering IBO, you need to be comfortable with volatility and the possibility that your investment could take years to pay off, if it ever does. If you like wild rides, IBO could be a roller coaster. Next, INDP, Indaptus Therapeutics. Indaptus is another player in the biotech space, but with a different focus. While Impact Biomedical is casting a wide net, Indaptus is zeroing in on one of the biggest challenges in medicine: cancer. Their approach? Immunotherapy, a cutting-edge field that uses the body's own immune system to fight cancer cells. It's an area that's seen some incredible breakthroughs in recent years, and investors are always on the lookout for the next big winner. Another biotech, but this one's focused on fighting cancer with immunotherapy. Indaptus is developing a unique platform that aims to supercharge the immune system's ability to recognize and destroy cancer cells. Their technology is still in the early stages, but the science is intriguing. If they can prove it works in clinical trials, the upside could be huge, not just for patients, but for investors as well. But as with all early-stage biotechs, there are no guarantees. The path from the lab to the clinic is long and fraught with risk. The science is promising, but still early stage. Indaptus has some exciting data from preclinical studies, but they're just beginning to test their therapies in humans. This is a critical juncture for any biotech company. Early results can be encouraging, but until you see success in larger, well-controlled clinical trials, it's impossible to know if the technology will live up to its promise. Investors need to be patient and prepared for setbacks along the way. Translation: it could boom or bust. Now, CDTX, Cidara Therapeutics. Cidara is another biotech but with a different mission. They're focused on developing new medicines to fight infectious diseases, a field that's become even more important in the wake of the COVID-19 pandemic. With antibiotic resistance on the rise and new pathogens emerging all the time, there's a huge need for innovative treatments. Cidara is working on a pipeline of drugs that could address some of these urgent challenges. They're battling infectious diseases with new meds. Their lead candidate is a novel antifungal drug that's shown promise in early studies. If approved, it could fill a major gap in the market and help patients who have limited treatment options. But as with all drug development, the process is long, expensive, and uncertain. Cidara is betting that their science will pay off, but investors need to be aware of the risks. Their main drug is still waiting for FDA approval, so the stock's super sensitive to news. Any update from the FDA, whether it's positive or negative, can send the stock price swinging. This makes CDTX a classic binary event stock. If the drug gets approved, the upside could be significant. But if there are delays, setbacks, or a rejection, the downside could be just as dramatic. For investors, this means you need to be comfortable with uncertainty and ready for big moves in either direction. High risk, but potential for high reward. That's the nature of biotech investing. You're betting on science, on innovation, and on the ability of these companies to navigate a complex regulatory landscape. The rewards can be life-changing, but the risks are real. It's not for the faint of heart, but for those who do their homework and manage their risk, there can be opportunities. And here comes LCX Crypto. Now let's switch gears and talk about something completely different, LCX. Unlike the other names we've discussed, LCX isn't a stock, it's a cryptocurrency token. But it's not just any token. LCX is the native token of the LCX exchange, a digital asset trading platform that's trying to carve out a niche in the rapidly evolving world of crypto finance. Not a stock, but a digital asset exchange token. The LCX token is designed to power the exchange's ecosystem, offering benefits like reduced trading fees, access to exclusive features, and participation in governance decisions. In many ways, it's similar to other exchange tokens like Binance Coin or FTX token, at least in concept. But LCX is still a relatively small player in a crowded field, and it faces stiff competition from larger, more established exchanges. LCX wants to be a big deal in the crypto world, but it's still building trust and a user base. The team behind LCX has ambitious plans. They want to create a regulated, secure, and user-friendly platform that can attract both retail and institutional investors. They're working to comply with European regulations, which could give them an edge in the long run. But for now, they're still in the early stages of building their brand and growing their user base. The crypto market is notoriously volatile, and new exchanges face an uphill battle to gain traction. Crypto's risky, but some love the thrill. Bottom line, investing in LCX, or any crypto for that matter, requires a strong stomach and a willingness to accept big swings in value. The potential rewards are huge, but so are the risks. If you're thinking about adding LCX to your portfolio, make sure you understand the technology, the team, and the competitive landscape, and never invest more than you can afford to lose. Each of these is high risk, high reward. Whether you're looking at small-cap biotechs or emerging crypto tokens, the common thread is volatility. These are not safe, steady investments. They're speculative bets on innovation and disruption. That doesn't mean you should avoid them entirely, but it does mean you need to approach them with caution. Diversification is key, and so is doing your own research. Don't just follow the crowd, make sure you understand what you're buying and why. Research, diversify, and never invest what you can't lose. That's the golden rule, especially when it comes to high-risk, high-reward opportunities. Take the time to read company filings, understand the science or technology, and get a sense of the competitive landscape. Talk to other investors, seek out expert opinions, and don't be afraid to ask tough questions. The more you know, the better equipped you'll be to make smart decisions. Follow for more no-nonsense takes. And remember, investing is a journey, not a sprint. There will always be new opportunities, new trends, and new risks to navigate. Stay curious, stay disciplined, and keep learning. If you found this breakdown helpful, make sure to follow for more straight talk on stocks, crypto, and everything in between. Until next time, invest smart and stay informed.